Good morning, everyone, and welcome to the On Time, On Target Morning Brief, where we invest the fighter pilot precision on a daily basis. Happy Monday morning. I'm feeling a ton better compared to how I felt all last week. Cough isn't quite gone, but we are getting there. Have some good topics to talk about today, primarily with, if you follow the news throughout the weekend, stimulus has now passed the Senate, which is the big hurdle, right? So they plan a vote either later today or on Tuesday through the House to be able to get it passed through the House. Expect President Biden to sign it probably Wednesday, I would imagine, for that sort of schedule. And then, of course, it goes into effect right away as far as stimulus checks going out by the end of the month. Again, $1,400 a person plus your dependents, depending on age. An increase in child tax credit. You're looking at the increase in unemployment benefits. And then what really, I think, personal opinion, is going to be the most helpful of all of it is the aid that's going out to state and local governments to be able to kind of help them get through this situation as well. So I think it's overall a big positive. So the question now becomes is what's going to happen with interest rates now that really stimulus has in effect passed, even though it isn't signed into law yet. So what I think is going to happen with interest rates, we saw it spike this morning back to that 1.6% level. Again, we're talking about the 10-year, which is the one that generally everybody's referencing the big move in. If you go back a month, it's sitting at 1.1. Now it's at 1.6. That spooked the markets in the past, 4 weeks, basically. I agree that with many that are out there that I think that move has now been played out. I do not think the 10-year goes higher than 1.6. I think we stabilize here. I think the money can start flowing back into the market. The market's taken the elevator down a couple of days last week and generally takes the stairs back up. Well, on Friday, it kind of took the elevator up a little bit. I think we could see the same move out of today, but not trying to make a specific call, trying to make a general call that I think all the inflation concerns are baked in. I think that the interest rates have now peaked for the 10-year at 1.6, and I think the market will be able to now resume its move back higher. And that's what we're going to talk about today. And of course, we'll talk about some individual stocks that will be affected directly by that. If you're catching us on replay, thank you so much for checking us out. Make sure you click subscribe and hit the notifications bell so you get notified when these go live on a daily basis. And then if you want to join us live, $25 to be here in the room every day. We have a chat window and a Q&A window off to the side, which you don't see, where people can communicate for me and I can answer your questions real time. But with that, let's go ahead and get started. All right, welcome back, everybody. Here is our lineup card for the day. Make sure you have your Q&A window set up as well as your chat window. Standard disclaimer applies. This is a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. And you can check out the full disclaimer available at ototnow.com. All right, welcome to Monday, March 8th. March clipping right along just as fast as the rest of 2021. Almost a quarter in the books. That's kind of crazy, right? But the important part is that things are moving fast. Tax day obviously has been moved for several folks out there from April 15th. But if it hasn't for you, you need to make sure you're getting on your taxes as well. All right, mission objectives for today: grow our money, protect our money, live off our money. Tactical objectives, we're looking at, of course, stimulus pass, like I talked about in the open, and what's next for interest rates. My call is we're capping here. We're not going to scream up and touch 2. We're not really going to move much higher than 1.6% on the 10-year. We shall see. So if you're thinking about, how does that parlay to you? Well, first of all, the market should stabilize and be able to continue its march higher. That's kind of why we're here. But if you're also thinking about buying a house or your property value or refining, all of that stuff seems safe in the short term. Again, if interest rates go up, refis become more expensive and maybe not worth doing. Obviously, if you're looking at moving, if you're selling your house, the interest rates go higher. Your house is worth less now because people can't pay as much to buy it, right? Because money's more expensive. So a lot of these things play out. I'm not worried really about any of that stuff. I think things will get back to somewhat normal here. People are tying the $70 price of oil to inflation. There's so many factors that go into the price of the oil that's not even a valid comparison. For a question today, we're going to talk about the mandate of the Federal Reserve. It's a dual mandate. We'll talk about that. Flow, long, short, open, short, long. Primarily talking long today. The short side that are out there, I don't even, not the shorts, but the day trading stuff. I don't even like what I see out there, but I'll throw a couple out for you. They are in the chat. Xpeng Motors beating earnings, probably your best number one long. Fisker's in play. AMC is in play from Wall Street Bets. And of course, Salesforce.com got an upgrade this morning. That's a favorite of mine. It's not gapping up too much, but I think it's got a lot of long-term potential as well. We'll talk about these. We'll go around the world, look at the markets, headlines here in the U.S., long-term investments, look at Amazon, Apple, CRM, Tesla. What's going on in Tesla? Dominion, if you don't follow, if you don't get outside of the tech space much, Dominion's looking attractive right now. And Grid, which is, I think, what's next on the future as far as stimulus is pretty much through the snake, if you will, of the legislative process. What's next? I think it'll be a big infrastructure bill. We should know by the end of the week what's next, right? Especially once Biden signs it, we can move on. Contingencies, academic resources are standard. Let's go ahead and take a look at TD Ameritrade. We'll go over to the long term. This is your S&P 500, focusing right here on the end. Did we break out of the bottom of this channel? Yes. Was Friday a kind of rip your face off Friday? Yeah, it was. It turned out to be. It took a while to get there. But thanks for the faith, and thanks for those. When I make a call like that and you guys reach out at the end of the day going, dude, awesome call. I was like, oh, I appreciate that. That's always nice, positive feedback. But are we almost back to this channel? Yes. Do I think we move higher today? I really do. The NASDAQ was down over 1%, almost 1.5% when I woke up about an hour and a half ago, almost back to even, right? And I see it going green today. That's my call on it. When you focus in on the 5-day, let's get the SPY in here. Again, you'll see that this was your Friday move right here in the dark blue, basically erased all of Thursday's move down, didn't quite get green for the week. Do we get green today for the past week? Probably not, but I do think over the course of this week, we're going to start to see some healing in the market. All right, let's go take a look at some headlines. Going to CNBC.com should be popping up right now. All right, there are our, we'll refresh these real quick. 0.36 in the red on the futures, and of course the Dow and the S&P are in the green, and by NASDAQ, I meant NASDAQ futures there. Going around the world, EU's in the green, pretty significantly in the green. Asia's in the red, pretty significantly across the board, so mixed forces there. There's our numbers from Fridays. Again, beautiful percent, almost 2% move up across the board. There's our 10-year that we keep referencing. We talk about it every day in here. Again, it was when it moved from 1.04 to like 1.1, that was yes, things are stabilizing, and then it goes to 1.6 and everybody freaks out. So again, historically low type of number, nothing to freak out about. That, your historic low interest rate does not scream inflation. What spooked everybody was the pace that it rose. Because if it continued at that pace, inflation would be, by July 4th, it'd be 18%. We'd have 1980 again, or 86, or whenever the rates peaked. But it's not happening. So stop freaking out about it. Oil, again, touched 70 earlier. Well, there it is. There's your headline, break 70. It's obviously fallen since then. Some little common sense has gone in. If you happen to like oil stocks, I had a good conversation with somebody this weekend about oil stocks. Your Valeros, your Exxon Mobils, your Chevrons, the move's been made. Don't buy in here. At least wait till you get back that 40 to 60 range before you buy in. And those are largely long-term holds if you want those. Gold and silver are mixed. Let's check crypto. Bitcoin above 50. So again, don't be buying into it here is my recommendation. Some other companies bought in this weekend, putting crypto on their balance sheets. Eventually, I think it'll take off and you will have to say that you missed it. But again, I'm using 50 as my cut line, or if you're looking GBTC, $50, which it's still below $50. So you can use that as your as your mechanism there. Okay, David Tepper, excuse me, getting bullish on stocks. I believe exactly what he believes, that raising rates are starting to stabilize. There's the futures rebounding off the lows. A bunch of upgrades coming out. Things are opening back up. Even Disneyland is opening back up, I believe, April 1st. So a lot of really positive news out there. GameStop and AMC are still in play. I put that in the chat for the Wall Street Bets move of the day if you want to participate in that. I'm not really particularly interested. Okay, that's all we're really going to talk about as far as the headlines. Let's look into individual stocks. Again, Amazon's down here around 3,000. So if things stabilize in the interest rate market, so if, right, no crystal ball, but if, I think this is a great entry point long term for Amazon. Let's take a look at Apple. Again, you never really get a great entry point in Apple because, again, they're buying back their own stock, as well as it just doesn't get too cheap anymore, right? So again, most of us have too much Apple already, so you're not really buying here. But if you're underweight Apple, then you can certainly add some here as well. Salesforce got an upgrade today, so I do expect it's up at 214 right now from where it closed here at 210. So it's already up a little bit. Obviously, it's fallen hard recently with a lot of selling, but I think it's got a very bright future. Again, number one customer relationship management software in the world. What's going on in Tesla? If you're holding Tesla, you got it. You believe, right? You join the cult, you get in it, you follow what the leader says, and then, like all good cults, you either end up in jail or dead. That's a joke. Don't get too excited. But yeah, if you believe in Tesla at 800 or 900, then you believe in it here, right? You would even consider buying more. I will tell you that the book value per share of Tesla is $23 if they were to sell off all the assets. Most people who value stocks for a living can maybe justify $100 a share. People say, when is it attractive to me? And I said below 100, and they look at me like I have three heads. It's just not attractive to me. The number one reason to be in Tesla is you have to believe that 10 years from now, we have an autonomous taxi society, meaning individual car ownership is gone or only for the super rich. And basically, we have an Uber fleet of taxis that are out there bought and paid for by the US government that we opt in and out of. And that's how our transportation system works. I don't think that's honestly going to happen. And if it does happen, it'll be Apple that does it and not Tesla. That's my take. That's why I'm not in Tesla. So just, my 2 cents. So Dominion's kind of my, hey, if you got to buy one thing today, buy Dominion. Look at this. You get your, 3.6% dividend, upgrades, 6 upgrades in the past like 3 months, and the things at a bargain basement price. PE shrinking, forward PE, if they make their earnings, going to be down at 17. So overall, pretty good looking for a utility. So consider. And then the last one is Grid. Again, if you're not into ETFs, you have to pay for. Again, this is like 0.6 or 0.7% that you have to pay. But when you look at the entry point here and what's next and all the money that's going to be flowing into an infrastructure bill, consider. So again, not a cheap fund, but something to consider out there. All right, we are less than a minute to the open. Let's go over to TD Ameritrade and get set up. Again, I have 3 longs for you today. That we have set up here on our charts, and I'll review those here in a second. Good morning, everyone. Welcome to the On Time On Target play of the day. This is a TD Ameritrade ThinkPipes platform that you have in front of you. You have 4 screens that are here. On the left, you have the 1 minute and the SPY. A lot of positivity going into the open. We have XPEV, which is Xpeng Motors, which is a Chinese automaker. Again, they're the direct rivals to NIO. They released earnings and beat earnings. They're on the rise. Fisker has bounced from selling off significantly. So consider no news story with that. And CRM got an upgrade this morning. They are on the rise. Well, and there is the opening bell. The week has started for us. All right. So again, this is the S&P 500 in the green here. We're looking at Xpeng, almost up 5%, Fisker up 7%. Salesforce, again, doesn't really fall in with our trading philosophy of being up. That we like that 5 to 10% move up. So it's certainly not gapping up. I'm not interested in trading any of these today, but I will say here's your little earnings bell for chart awareness for your Xpeng. If you back out on Xpeng, there's a lot of risk in the Chinese EV names, just like there is with the US electric vehicle names. So it was up here at 40, fades all the way down to 25, beats earnings, and now is gapping up to 29. So if you believe in the EV space, you could pick some up here. NIO is another name that ran up so hard, so fast that it's kind of been crushed. So it was up at 55, down at 36. You could really look, it's not all that much different here in the US from Tesla, right? Tesla again carries a lot higher price point and is just simply not attractive to me. But other names that are out there in the space, Blink, you go to the charging side, been crushed, just started to bounce. I wouldn't buy it here, but if you haven't sold yet, I would not sell here. I'd certainly hold on. Plug Power is another one, following the same path. These things travel together, whether they should or they shouldn't. So just realize they do. So it's kind of it is sort of thing. And if you could back out to like Q Clean, which again is the clean energy, which holds many of these, drop from 80 down to 60, it's bouncing as well. So again, these things are traveling together. I tend to just own the fund, the Q Clean. So I have exposure to all of these versus the individual names that are out there. All right, let's focus back in on, lost our ability to focus back in, so we'll not worry about that. All right, Fisker holding steady, and CRM just not doing much overall. NASDAQ still negative 0.5, and the other two are in the green. Let's go ahead and take a look about what's going on in the world here. All right, Empower up 21%. Again, psychedelic name, if you will. Clickstream's on play a little bit. Iconic up a little bit. REAX is a smaller name there as well. Trade Desk, I like Trade Desk. We haven't looked at Trade Desk in a while. They've been selling off with tech, of course, but their expansion around the world is pretty impressive. So again, it's a advertising marketplace, if you will. That's a very, very eighth grade explanation of a very complex company. But 835 dripped all the way down to 560 or so, back up to 670. Not worried about this name at all. Disney, nice move up. Again, all their parks are going to be open here soon. And of course, they just had a big movie release, Raya and the Dragon, I'm not sure exactly how that's pronounced, but that came out this weekend. I expect big numbers out of that if they're not out already. So expecting good things for Disney. Boeing continues to rocket higher no matter what happens. But GBTC's up a little bit. Let's take a look at that and see what the price point is now. So again, at 44, you can hop in here. I use 50 kind of as the line, so you can still get in on it if you want. Lowe's, FireEye, the cybersecurity space has been up on the move as well. Raytheon, so a lot of names are up. Let's see what's in the red for today. Tencent Holdings, so Chinese names, right? Tencent Holdings. KWeb is your Chinese tech firm that I love, which is getting slaughtered, right? So let's look and see if this is a good entry point on KWeb. Yeah, I love it here. It's up over 100. What was this? Let's back out a little bit. That's not even that long ago. That's only a few weeks ago. Let's look at so this is a 6-month chart. So you have 6 months move up all the way up over 100, back down in the 80s. Love it here. I think overall Biden is going to be a bit weak on China. So I think they're poised to take advantage of that. They have like a 6% GDP target. That's impressive. So when you look at these Chinese names up here, you have Tencent. NIO is a Chinese name. Alibaba, I love Alibaba. So anyhow, I think all those names are becoming a lot more attractive now. Even Luckin Coffee, right? Which we follow. Luckin's more of a fun story than a, huge investment, but a lot of us have a bunch of that stock as well. Okay, so there are some names in the red, pretty significant here. A lot of Chinese names. If you hold PSTH, we're about to get rid of that. They went up 10% on Friday. Just dropped in. I think it's time to move on. We do have the Roblox IPO coming up this week, so that's one of the names I'll be selling is PSTH to free up money for that. Again, that's really only if you're in for the total return type investor. So, okay, let's take a look at the Federal Reserve. We'll get rid of this chart and go back to, excuse me, back to Investopedia. So you understand what the Federal Reserve is doing. They have two mandates. So this is what you're supposed to learn in school, is to achieve low unemployment rate. So that's the first one. So again, that's why they're always looking at how do we manipulate the money policy that we have the ability to manipulate to keep unemployment low. So to keep people employed, that's one. And then maintain stable prices throughout the economy. This one gets interpreted differently depending on who you are. So it doesn't mean no inflation. It means they put a target of 2% inflation out there. So therefore, with 2% inflation, inflation's been running a little bit low, right? It's been running below 2. So there were actually, there was talk of increasing inflation like 3-4 months ago. Well, now we kind of have that, right? And the open market did it. The Fed didn't really do it. But you have the 2% is really what they're shooting for is their inflation target. So that's kind of what we've been having, just below that. So that when you say maintain stable prices throughout the economy, they think the natural progression over time would be 2%. So if you think, okay, how does that parlay? So every 50 years, so in your lifetime, if you're on the younger side, you're going to see prices of everything double. Right. So when you do financial plans and things like that, it is important to understand that things are going to get more expensive. And just because you can live off of 50,000 now or 100,000 now doesn't mean you will later on. That's why you don't keep money in the bank. That's the purchasing power you're losing by just having money sitting there. So either use it to pay off some debt, use it to invest, use it to actually do something like as a tool versus just having a large chunk sitting in the bank outside of your emergency fund. So 10K, maybe 20 if that's what makes you sleep at night. Money above that is just simply wasting away due to loss of purchasing power. So consider. All right, that's all I've got for today. A little bit of a short show, but we're going to get back into the market hard and heavy tomorrow, and hopefully have some trades for you. Thank you so much for listening in, and enjoy your Monday. Talk to you soon.